super panel coming up. We've got Benjamin Cabanes from Korian, Julia Momotiuk from BONARD, Frédéric Div from Mosaic Asset Management, and Alexander Hubbard-Ford from Terragon Residenz Invest. So really super panel. Just a quick introduction from you, Frédéric, just of yourself and Mosaic Asset Management.
Thanks for joining us. As Richard said, this is the second report that we are publishing on the German market after having published one on the French market. And again, the idea is to bring data, transparency, information, and education to the market. We think it's this space is a tremendous space, of course, particularly in the current environment, attracting more and more interest. But we believe, and that was also the objective of the Healthcare Association, that the more you bring data, the more you bring information to the market, the better it is. Mosaic is an asset manager specialized in healthcare, in the broad term, going from senior housing to clinics to nursing homes in Europe.
Perfect. Thanks very much. Alexander, just a quick introduction of yourself and what you do.
Well, I'm a managing director with the Terragon Residenz Invest, but also director with the Terragon AG, the holding company of the Terragon Group. I'm responsible for the corporate finance and corporate development, as well as project finance, and as well as all the transactions that we do.
Super, thanks very much. And Benjamin, just quick introduction from yourself as well.
I'm Benjamin Cabanes. I'm the director of real estate in Germany for Korian Group. So I'm taking care of the portfolio here in Germany. We have roughly 250 residences. I mean, mostly stationary ones. But we have also 61 assisted living facilities. We are still growing. And I take care of the asset management, the facility management, new buildings that we construct, and renovations and everything around the real estate.
Perfect. And Julia, just a brief introduction of yourself.
I'm a senior research manager at the company, representing BONARD here. We are a market research company working on residential rented asset classes. Now stepping into the senior living waters.
Great, super. And Julia, I know that you're going to give a presentation now just for some of the highlights of the report. So if you could share your screen and the presentation, that would be great. So
a bit more about us, what I didn't mention before. We are actually an international company having offices and teams in Europe, in Latin America, Australia, and North America as well. Our data is independent and certified. We are not only using secondary sources, but we also get primary data via our mobile units on site. So going right into the report, some key findings, a brief summary about it. As Richard already mentioned, and Frédéric said as well, this is the second report in the series. So last year, we've introduced a report on the French senior market, and this year we've touched on Germany as a market for senior living. The report was done in cooperation with Mosaic, and we tried to prepare an up-to-date insight into the sector, taking a look at the national level, but also in the focus of top 20 locations across the country. This was done with our team of 5 specialists. We look over 150 sources, screened secondary and primary research, and it was also following the code of conduct from August to October. You can see here that a full report will be available to download either on the link, or you can approach us or Mosaic directly. I will now move to some key findings in more detail. So here on the screen, you can see 6 top main ones. First to address is the growing demand. You can see that the share of seniors age 60 plus is actually increasing, and it will continue to do so. So it's even the supply will be growing, obviously, with the time for senior living. It will not outgrow the demand and there will be still space in the market. From the demand to supply, the second key finding here is on that topic. It's important to say that we didn't screen the whole country supply. We rather focused on those top 20 cities. And in there, we've managed to see 65,000 assisted living apartments. But again, even closer focus was on private commercial establishments. Later on, I will address on the slide specific definitions and explain you what actually are those that we call private commercial assisted living ones. But just now to mention that top numbers, that there are up to 22,000 apartments in these top 20 German cities. When I say top 20 German cities, those were selected based on the population of seniors in those. So those are basically with the biggest pool of the demand in Germany. After demand and supply, there is basically a point of a trade-off between those two, what we call a provision rate. It's still explaining that Germany as a market is undersupplied in total. And with the new pipeline, new supply coming, it will still, provision rate will continue to decline. By 2025, it will decline almost all top 20 German cities. When addressing the pipeline, future stock coming to the market, we managed to see more than 370 senior living residences in the pipeline. And then when we drill down to those top 20 cities, they covered 20% of apartments. So those were key findings very quickly, but I will then go down to specific chapters and areas later on so we can discuss it more closely. This one is on the demographic overview. First, showing Germany in relations to the other countries and Europe as a market. So you can see here it's in the top 3. It's common trend, the aging population in Europe. In Germany, the reasons behind it are well understandable and clear. So high quality healthcare, seniors becoming more independent and self-sufficient, and of course, a robust social protection policy that there is. You can see that the decrease of working age population is predicted not only in Germany, but in the European population in general. This is on the slide to the graph to the left. Moving on to specific demand for senior living in Germany. We drilled into 3 categories for the population. The one that interests us is 75 plus category. Those are those prospective customers, seniors who would need the accommodation. And we see that target group is expected to grow even more than it is now. Not only this, those current seniors, but also the cohort that will be aging with time, 60, 74 years old. Even though the main target group of senior living establishments is even older, it's actually 80 plus. This categorization was offered to us by Germany, by Statistical Office, so we used it as such. Moving on to the next slide is actually the population per city. Again, focusing on that 75 plus category and showing the growth with time. You see that Berlin is leading the way with actually the steepest growth and the highest pool of people aged 75 plus. And this cohort is expected to increase even more. Maybe I will let Frédéric also the space to comment here.
Just to realize, I mean, if you look at, for instance, Berlin, it represents about more than 125,000 people over 75 years of age in not more than 5 years. And so 5,000. So if you take the current provision rate, that would mean an additional 5,000 apartments needed in terms of, if we wanted to keep the provision rate, not to even catch up, but just to keep the provision rate. So just to show you the immense requirements and demand that is coming in the next year. And this is only up to 2025. As Julia said, I mean, and Alexander and Benjamin will comment to that later on, but the average age of entry in a senior residence is around 80, depending on the segment. It could be more towards 85 or slightly less. But if you just realize what it means that it's the people who are born in 1935, 1940. So we have not yet touched the baby boom, which is going to come in the next 10, 15 years. So just to make you realize the sort of reserve of growth that is in that market.
Thank you, Frédéric. Okay, so moving to the next slide, there are actually several conclusive comments to go from the numbers to some qualitative insight. And just to recap, the aging population journey, the growing life expectancy due to development of medical treatment, the overall conditions for population to live are improving, both social and economic. They're becoming more independent, as I said, more self-determined. The number of single-person households are increasing. You see the numbers here on this slide specifically, and is all in complement with the quality of services that being improved from the side of the establishments themselves, and also due to the strict governmental regulations.
Maybe just to touch on a couple of the points that are indicated here, the rise of the single-person household is quite an important one. I mean, as you know, the traditional way for when people grow older was to have people to keep the elders in the family. The fact that you have more and more single-person household, make it really difficult for this to keep on happening, and it's a really accelerating factor for people to maybe leave their home, not being able to find natural helpers, and move into assisted living or service living. The second one that is important, and again maybe our panelists will come back to that, is that there has been a recent change in the last 3 years in the German regulation with a new law really sort of improving significantly the home care, ambulante Pflege, and of course some of the provider of that care have realized that by building service residence and then providing ambulant care into these homes, well, it was bringing a very good quality of living and quality of help to the residents, comparable and sometimes maybe potentially even better than nursing homes, even though it's not exactly the same type of clientele. But this is a key driver also in the growth of assisted living in Germany.
Right, thank you. Good. Moving to the next one. This is actually the slide concluding the demand. So here we took a closer look at the care market and showed the preferences basically of the customers, explaining that 35% of seniors in Germany reported to prefer to be cared for in a retirement community, and another 37% prefer to live in care homes. At present, the German care service market remains one of the most capacious in the world. Annual spending totals to 58 billion, making this segment very attractive for domestic and foreign investors. So now moving to actually the supply, and this is the promised slide for the definitions and types of those senior living establishments we actually addressed in the report and looked into. So you see here that we've dissected the segment into 3 categories and stated them as you see on the slide. We also tried to unify it a bit. So now when we look at the second market after France, it's also aligned. So we would be afterwards able to compare several countries. So, you know, those definitions needed to be tweaked into that direction as well. So you see the first category, senior living establishments for dependent people, consisting, or specific examples would be assisted living communities and nursing homes, They are regulated sector, and they were not a subject of the research as such. So those establishments were noticed but not mapped into such detail as the second 2 categories, being assisted senior living establishments, those service residences that can be private for-profit, private non-profit, and private commercial, and public ones, where we again focused on those private commercial establishments only to see what prices they charge, what services they offer, and look into them into closer detail. And then there is a third section for senior citizens housing and community living, not regulated compared to the previous 2, and also being part of the research. So we focused basically on sections 2 and 3 when we prepared this report.
Yeah, just a quick word. Of course, definitions are quite important because they vary from country to country. A word like assisted living can mean different things in different countries, different markets. So it's important to understand what we have focused on, and also even within that sector, there are sort of a variation of service providers and of type of service. And again, hopefully Alexander and Benjamin will talk to that. And I think we have representatives, for instance, of one that is more on the Servicewohnung sector, and maybe Korian, which is more on the Betreutes and closer to the care element. So it would be interesting to touch on that, and important for everybody to understand these sort of differences and definitions.
So once we're into the definitions, we can see the specific examples of the market supply being the key elements of the development that you see on the right side, or main private commercial service residence providers on the left on the graph. So it would be important to mention that the supply and the number of assisted living establishments has been growing. You see over 19% in the last 10 years. Then we looked into the ownership structure of those to specify 30% are under the management of the private companies. This being, again, the focus of our report. The market is categorized by the consolidation. Largest providers and investors heavily involving themselves in developing the portfolios. Then another characteristic is shift to smaller cities. So you have here Hamburg, Stuttgart, Bonn, and Hanover mentioned as being of more interest. And kind of an overarching statement for the statistics that's been uncovered, that in those top 20 German cities, over 65,000 of apartments are present that cover 22% of supply in the country. And we'll also see Korian as the player leading the chart by the number of commercial service residences in Germany.
So here we did not have the sort of the countrywide number of apartments, which would be, I think, maybe more telling in terms of ranking. I think what this graph is showing, and again, the panelists will get back to that, but it's more the result of the history. In Germany, the Betreutes Wohnung, the assisted living with a bit of care, has developed really next to nursing homes. So you typically have a nursing home of 100 to 200 rooms, and next to it, operators were developing for maybe less dependent people, but still people requiring quite a good level of care, assisted living, like 30, 40 apartments. And we'll see on the next slide that, you know, depending on the number, on the operator, you know, the size of the residences vary a lot, and it shows you, you know, really the breadth of the different offerings that exist currently, you know, among assisted living operators, senior living operators, you know, from a pro senior, you know, who would have, you know, relatively large residences, to an AVO, for instance, that would have really more focusing on smaller, much smaller sort of community living type residences. So again, quite important to understand that we have, you know, as a research report, provided relatively general numbers, but when you drill down into each category, then it gets, you know, you have a lot of variation.
That's right. Okay, so the next one would be basically a brief outline. I tried to put all those 20 cities together on 2 maps. So this slide and the following on just showed all of those who are subject of the research. So top 20 cities, the population of people aged 75 plus in each, then the number of assisted living establishments, the number of apartments in them, and that provision rate in each city. This slide is similar to the next one, while here we focused on all the assisted living establishments. In here, the number just of those private commercial ones are shown. And
well, maybe, yeah, just a quick point on that. We have seen in previous slides that, you know, the private element represent about 30% of the offering. We expect that to increase significantly in the future, because a lot of the growth is captured by private operators, even though, and again, Alexander will tell us about this, some of the non-for-profit are, you know, quite also dynamic. And what it tells us as well is, you know, you have, of course, in terms of private operator providers and provision rate, you know, you really have very small provision rate. We'll make some comparison to France. It is the same. So the private operator bringing a little bit more sort of differentiation to the market are clearly, you know, there's still a lot of demand for that, because the provision rates are really very low still.
Yes, a lot of the space in the market, either in the total one on this or this private commercial part. I agree. Moving on to the next one, this is actually a case study. So we wanted to show you that aside of the data prepared in you know, tables and graphs and charts and the report, there is also an interactive map like this, where we've put all those individual buildings and establishments we mapped on a map like this, explaining, pinpointing the buildings and putting all the individual information on them. So various types of establishments in Germany with individual details on prices they charge, or the capacity they offer, the location, the type, and then provider it is behind them is put in here. So this
that's quite a useful tool that you know will be developed also in the future on focusing on all the cities and trying to cover as much as possible. Of course, we can't do everything at the first time, but you know, very useful tool for people to get an idea, investors or operators, to understand what is the, you know, offering in a city, and how can they compare, and how they can differentiate, of course.
Yeah. And where also there are clusters of that over are located, they are obviously mirroring the demand in those cities. So this is for that case study. And then the next slide puts the focus on the product and the price. So you can see here actually those average monthly rents for 1-bedroom apartment in private commercial senior living residences. And it is it ranges from 474 to over 2,000 euros for an apartment per month in Munich. The prices, please note that the prices are collected as advertised to customers, so this is what they see promoted, and they can vary, but we've tried to collect them as they are available. So this is actually how the customer compared them as well. I think if Frédéric doesn't have anything to add, we can move on.
No, I mean,
maybe one question, but you put it on your footnote, I think, but the prices are quite dubious because they include some service offerings in some establishments and other not. So it's quite of a mix. It's not only the real estate service; it's also the extra products and services that are booked on top. That maybe as a compulsory included service, but it's quite hard to distinguish, I guess, or to say it's the rent of an apartment. I think it's more than that, right?
That's what I wanted to say, is that, you know, the word of caution that of Julia is quite important when reading this graph, is that, you know, it's an average. It's based on the availability on 103 establishments. So of course, again, it's not all the market, and it's based on what is advertised to the customer. And as Benjamin just said, sometimes it includes the service, sometimes it includes the service without including the meal. So it's a mixed bag, and so this has to be taken with caution. We wanted to present something because, of course, it's important, but of course, in the individual research that we can do, then we will have a much more focused and precise information.
Yeah, totally agree. Thank you, gentlemen. Now, from the price to the product. So here are, again, few names mentioned with the offer that they have. So here is a case study for the size of the apartments. So studios, 1-bedroom apartment and 2-bedroom apartments were looked at, and the sizes that they provide vary quite massively. You can see that the majority of the offer featured from 24 to 50 square meter product for 1-bedroom apartment. And the offer of studios were more limited, let's say, than the offer of 1-bedroom apartment. So this was, a 1-bedroom apartment was taken as a sample to present on. And okay. And apartments, what we maybe call apartments, would be good to address it. They have a kitchen, they're usually furnished, but residents have the right to make certain changes to that and maybe bring their own furniture. That's on the product. Then there is information about facilities, services offered in those residences. The gentleman mentioned those may be paid additionally, offered on top. But just to get an idea of what can be offered and how popular, basically how widespread it is to be offered, you can see here the share of private commercial service residences offering these services. So if we can take a look from a garden later on, these are services, facilities offered by majority of the establishments. And then, let's say, spa or a TV room are not that common. We've also compared this to the French market, and I have to say that the list is quite similar, maybe with a couple of services. I've noticed that the gym or the parking are offered more commonly in the French residences, but let's say spa is still a rarity in both sectors. Frédéric? You would like to add something?
No, I think again, I guess we'll speak to that later with the panelists. But you know, it just goes to show, you know, the variety of offerings that you have, and maybe, you know, with the new generation of products coming to the market, you will have more and more sort of diversification in terms of the offerings that will be offered in terms of specific, you know, swimming pools or sauna or spa or psychologist or, you know, whatever, being added to the market, and expanding the quality of the offerings and making it more individual and more, you know, diverse.
Great. Okay. Here are some visuals for the product and the product concept, either from the interior or exterior. Those are modern, private, commercially owned establishments that we screened. And then looking into the pipeline. So this is the future supply coming to the market. You can see that it's strong. Establishments are coming in, entering the market. For maybe the term pipeline, to explain it a bit more. So we looked into establishments that are already in the construction stage, and as well as those that the plans were announced. So providers have stated that they are planning to build an establishment in a city, but no construction work has begun yet. So there were approximately 400 residences that are being built. And they would add a total of over 16,000 apartments for the capacity in Germany. There are over 3,000 actually apartments in 52 establishments when we talk about top 20 German cities. And basically a statement to take out of all this is that still, with such a pipeline, with this supply coming to the market, it will not be enough to satisfy the demand, which will also increase with time. And Berlin stands out as a city that is most undersupplied out of the top 20. And you see here that the provision will even decrease in 2025.
Just to give a bit of color from a euro perspective, euro amount, we don't have, of course, all the budget of these pipeline, but just by taking sort of rough numbers, what is shown here, which is not, as we saw, exhaustive yet, is represent a sort of investment requirement of nearly 2 billion euros. So just that shows you the amount and the depth of requirement for the German market in senior living.
Right. I have a slide here talking about the pipeline in specific cities then. So I've mentioned Berlin. You can see here Leipzig as well. But the trend in German cities is similar. So with this future supply separated by the years of the opening, it will still not satisfy the demand.
Just to illustrate that, if you just take Berlin, you know, here you have, you know, short of 700 apartments sort of in the pipeline. If you remember the number I mentioned earlier on, we had, you know, calculated, you know, roughly 5,000 apartments needed based on the forecast population growth. So you see that, you know, how there is a discrepancy between sort of market demand and the supply.
Okay, so now moving to those euro amounts that Frédéric mentioned before, we came into transactions. So we also looked into the deals and investments happening in the sector in the recent years. You see here main investors active there, and the origin. It's not just German investors that are interested in the sector, but also international ones, being those from Sweden or Belgium or France. Next, yeah, Frédéric?
Sorry, if I just want to add something. I think here it's yes, it's senior living, but I think in some of these transactions, most of what was acquired was actually more nursing homes. You know, I think Deutsche Wohnen, Primonial, Aviarent, Cofinimo, Edifica. You know, these were mostly nursing home transactions, even though there were some assisted living, but they were mostly nursing home. This is just to show, and again, we'll maybe touch about this later on, but I think the assisted living sector as an investment destination has been mostly in Germany geared towards individual investor historically. Now more and more institutional investor, but still very German investor. And I think, and that's also the point of what Mozaic is trying to do, and with this report is, you know, of course, opening up also to non-German investor, because again, I think the requirement, the demand is the need is very large, and it needs not only German investor but also international investors.
Maybe if I can add something also on the yield you are showing. As you said, Frédéric, rightly, the 4.5% I think is right for nursing home sector, but I would pretend that it is much lower for assisted living apartments, because we see on the market rather yields of 3.5% in this sub-segment of assisted living apartments. And I think both yields are, with a spread of 1%, are also going down very quickly.
Correct.
Even towards 4.25 in my last
I'd like to second that, yes.
For the nursing homes, yeah.
For the assisted living, senior living, it's 3.5%.
Exactly, prime, yeah.
Yeah.
So as we discussed yield, I think we can move on to the next slide from this one. And we came to the comparison of those two markets. I keep referring to France and Germany. So you see here the pool of seniors, the number of senior residents is bigger in Germany in all three age groups. And then logically the supply is higher. So you see on the middle graph the amount of apartments in assisted living establishments is higher in Germany than in France. But interestingly enough, then the provision rate is lower for Germany than France. So there is a bigger space for new establishments to come in there.
Just one thing, Julia, on this. I think, again, on the perception of senior living in the eyes of investors, I think, and I know we have Arnaud Féty on the line here, who I think Domitis has done, you know, quite a lot to, you know, sort of provide information to the market, to investor market, and attract investors to the French market of senior living. Of course, Alexander is also doing that on the German market, and Korian, obviously. But I guess, I mean, at least my experience when talking to investors has been that this perception is that the French market is maybe more mature in senior living than the German one. And I think what this report shows is that it's not, is that maybe that perception is not exactly correct, and that the depth of the German market is very large, and it has already matured, but there is still on top of that a lot of growth. So it really makes it an interesting one.
The further comparison of the two is provided also here. So we can look at the prices in two markets and the amount of pipeline. So you see, in terms of apartment offer, 1- and 2-bedroom apartments are a little bit less expensive in Germany than in France. And it's then reverse for studio. Difference is not that big. There was, in my previous slide, mention about the cost for the apartment in Munich, that it was over 2,000 euros. In comparison, a studio in Paris is for around that amount. And talking about pipeline, it's a much stronger pool of prospective establishments in Germany than in France. It's actually 17% more.
Just one question, please. You don't show the 3-bed apartments, although in my understanding, it is also quite attractive for couples because they have their own rooms plus a nice living room and a kitchen. I think at least at Korian, we also always look at having such apartments that are bigger, larger size and can be attractive for couples. How does it look like?
Do you mean 3 rooms altogether, or because the 2-bedroom here is actually 3 pièces or 3. Right. So you mean it's 2 bedrooms plus a living room in here?
Yeah. 2 bedroom and a living room.
The one you're referring to, or is it 3 bedrooms plus a living room?
No, 2 bedrooms and a living room.
Yeah, so that's the one. That's the one on the left, on the right.
That's a 2-bed. Okay.
Yeah.
Fine. Yeah. Thanks.
Okay. Then to the next one, gentlemen. We've came to conclusions. So several overarching statements here again, bringing that aging population, further development in the market, the prerequisites for the development that are present, high level of income and disposable financial income for the seniors. Again, recap for the supply mentioned in those 20 cities and the provision rates. You see that Bonn, Nuremberg and Stuttgart came up as the ones with the strongest demand, highest number of 75 plus people in the city. And a conclusion about the pipeline again, with yields following, and a conclusive statement from me would be that German assisted living market is set to remain one of the most attractive in the European Union, and in the coming years it will attract more and more domestic as well as international investors.
Thank you, Julia. Richard?
Yeah.
Maybe we can open the floor.
Yeah, that's great. Thanks very much, Julia. Thank you, Frédéric. We've got here from Ron, impressive unbiased research, piece of research, sincere compliments. 2 questions. What are the key findings in terms of comparisons between countries on a pan-European level? And 2, is there specific changing in terms of consumer behavior that the industry has to adapt to? So maybe, Alexander, I'll come back on the pan-European one in a second, but Alexander, let's just come to you. In terms of changing consumer behavior, I suppose, what have you been seeing? How have you seen that evolving, particularly in the German market?
Well, Frédéric made that remark earlier that the structure of families have changed over the last 30 years, and we find more and more senior citizens being lonely, separated from families because of the young ones moving away. And their spouses having died. And so, but at the same time, it's a different generation. It's the pre-war generation that's now moving into a post-war generation that's moving into these facilities, and they want to stay more independent. They live longer. They have an independent lifestyle and an extended life. And so you have to now change the facilities according to that new lifestyle and that much longer lifespan. And so I see that the older facilities, and in Germany the average year of construction is 1991 of those facilities, they have to be updated, either the older ones, or you have to bring new facilities to the market to actually meet those new basic needs of senior citizens. That's what we are trying to do with our facilities.
Okay, good. And just picking up that point, Frédéric, in terms of the European comparatives, obviously Mosaic active in different regions. How do you see that? And I'll also come to you, Benjamin, as well, just for your sense of that. Frédéric.
I would say that we will discover that more and more with the further reports that we will be publishing on a country-by-country basis. I think we have showed a little bit what the differences between France and Germany, which actually we can see that there aren't a lot. They are developing more or less, with the same pace. And the key element, I think, is that you have the nursing home, which in a less developed environment is going to try and cover all of the spectrum from the 75 to the 100, and very dependent to less dependent. And then you have and then the market becomes a bit more refined, and then you have a segmentation. So and we talked about this. You start to have nursing home on one side, and then assisted living, being covering a little bit of people sort of semi-autonomous, and then maybe and again maybe Alexander and Benjamin will talk to that. Is that you start to have more sort of serviced residents where the care element is maybe less present, and then you have sort of more really service oriented offerings coming. And we are seeing this in France and Germany. And for instance, if you look at Italy and Spain, they have so much sort of there's much less equipment, much less provision rate in the general provision of sort of service towards the older population. So they're still building up the capacity in nursing home, and of course the assisted living is maybe less present. So that's what I would see on the large market, not entering the UK, which is still something a little bit more different. So I guess in general, what I would say is that you really have markets that are in a different speed, a different level of maturation and segmentation.
There's a couple of questions as well that we can deal with, which are one is rental of senior living apartments in Germany subsidised by government or paid by pension schemes? Somebody can pick that up, and then I'll come back to you, Benjamin.
In the nursing homes, yes, and on the assisted living facilities, it's another scheme. But yes, usually you have this combination.
And in terms of senior living, in general, is that paid out of somebody who's retired, their pension money that they then pay? Is that how that works?
We always talk about the poverty rate of senior citizens or pensioners, but Germany is a very affluent country in terms of pensioners. 20 to 30% of all pensioners over 65 can afford the rents between 1,500 and 2,500 euros out of their pocket, and that's only 50% of their monthly income. So we do have a great demand on that side of the spectrum, because these people can't find adequate facilities to spend that kind of money. Because most properties in Germany or facilities are on the 1 to 2 star category of service living, and that's not adequate for someone who wants to spend 2,000 euros a month rent, plus they can still afford the service.
Okay, good. It might be good.
Another point on that, sorry, Richard, because it's quite important for people to understand, and I've seen a couple of questions on that element. You have the sort of residence, I mean, the rent aspect, which people have to pay out of their own pocket, and maybe this own pocket is pension income or or whatever savings, etc. And then you have maybe the service element, and some part of that service element, particularly the one linked to sort of getting help because you are a bit dependent or slightly or a little bit more, you need specific care. Then this one is also subsidized through the long-term insurance scheme that is provided in Germany, and that's the one where the German legislation, it's at the federal state but also at the Länder state, is really pushing this one, and so that's why you're getting a lot of service through sort of this scheme that corresponds to a home care scheme, but you can access services through that. So you pay through your own pocket the rent, then the service is partially funded by local authorities.
Okay, good. Benjamin, it might be good just for people who may not know, just to run through, I mean, because you're active in the nursing home and the assisted living kind of area, just how do you see the dynamics of those two markets? And are they beginning to blend together a little bit, or how do you see that evolving?
As very nice studies showed, I think we have a lot of good drivers in force in Germany, to the aging population, to the very nice funded system, and the reforms that regularly comes to also take into account demographic and social cultural changes. So I have actually a very nice situation where, as a provision rate, as you discussed, it was very low. We have a green field of opportunities arising, and yes, I see a very dynamic and positive growing market in the coming years, coming to need to address.
Alexander, you wanted to comment?
Yes, so we looked at the market, and we think there are 300 units missing in the serviced senior living market. 300,000, I'm sorry, at the moment. And just to catch up with that demand is a market of 50 billion euros if you wanted to invest in these facilities or build them. And then we've just caught up with the existing demand. We are not talking about the future increasing demand. So it's a huge market.
Okay, good. I'm going to whistle through some of these questions as well. So this is from Ron again. Thank you, Ron. From an investor perspective, is it normal to have master lease contracts with an operator on senior living, assisted living, or do we see more and more individual leases with clients? Does anybody want to pick that up?
On our side, we need a master leases with an operator who will then operate the facility and lease those properties out to the seniors.
But it's still, I mean, it is not uncommon to find offerings, even to, made to institutional shareholders, investors, sorry, of having, properties where you have to deal with the individual rents. I think this goes to, again, the history of that sector in Germany that was, originally catered to individual investors. Private retail investor, and I think as it moves towards more and more institutional investor, I think this will disappear, but it's still quite present.
I fully agree, but that then typically refers to small facilities where you have 20, 30 units, where you also don't have a large offering of services or a strong offering of services. Right. But once you move into the category of 100, 150, 200 flats in a facility and an upscale service, then you need an operator to actually handle that property for you.
There's a very quick one here as well, which Julia, you may be able to assist with, which is the private assisted map showing a subset of the previous assisted map? Thank you, Zabir, for that.
Yeah, thank you. Indeed, it is showing both types. The private one as well as the total.
And this one's from Michael Voge. Thank you, Michael. Is the market entirely rental, or is anyone doing a deferred fee model with upfront purchase deposit, which is highly successful in the New Zealand and Australian markets and beginning to be the focus of investor attention here in the UK? So that one, a UK one. Is that sort of thing being looked at in Germany or not really?
I have not seen that, but maybe I did, Benjamin. Or
We've done it once. We've done it once 10 years ago or so, a model like that. But typically, it's not the case.
And the same from your side, Benjamin?
Yeah, not on our side, no. Not yet.
Okay. This one's on a broader level. How will the larger players like Elheim and Korian put their emphasis on the expansion of capacity in the senior living field versus expansion in the field of nursing homes? How will COVID impact the senior living field in Germany? Will it have any long-term effect? So I suppose that's also, Benjamin, are you going to pivot a little bit more towards senior living, assisted living than nursing homes? What's I guess how does that fit in with the strategy?
Yes, we are indeed still mainly a nursing home operator and player, which still makes out 80% of our growth for the time being. But we have seen in the last years growing tendency that we in the demand in all those other care forms, including assisted living, but not only. I would also say daycare units or community care are increasingly important. So we are also following this trend and increasing the rate, the share of development we do in these segments. So indeed, we are putting the emphasis on those new innovative care forms to balance our portfolio, to get also the customer a little bit earlier in his journey in our homes, and following also a model of a campus, trying to have a combination of assisted living, daycare, and stationary care, and also assisted living, also combined with sometimes child care, because that's the way we share the maximum services between the resident, all those units, and can maximize the people we finally care in the whole house, especially in the last years of their life.
Okay, good. And there's a question here from Marcus Roberts. Hi, Marcus. Good to see you with us. How has occupancy fared in, broadly in the sector, really, senior living, assisted living, healthcare, over the last 6 to 9 months? So I don't know, has there been a change in terms of senior people's appetite to go into this kind of senior living settings, nursing home settings? Have you seen anything, Alexander, for example?
Yes, we saw an increased demand during COVID. We had seniors call us up if there's any availability, because they realize someone has to take care of them if they can't leave their flats. And of course, that's something you can't do if you're by yourself and your family doesn't live close. So yes, there's been an increased demand overall, and especially during COVID.
Okay, that's interesting. Frédéric, what have you seen?
Maybe Benjamin would be interesting to have his view there, and then I'll give what I have seen.
That's been thrown in your direction, Benjamin.
No, I think for Korian, I have no feedback that could be interesting on the subject, but.
So I think what I have heard from the market is that. Yes, I mean, in some cases, because nursing homes were forbidden to take on new customers. Of course, the occupancy rate has, sort of reduced a little bit. It has less been the case for assisted living, and as Alexander said, maybe assisted living was also seen maybe as sort of less. It was less in the eye of the press, in the eye of the media, and so maybe it was seen a little bit more preserved, I would say. And it's true that because in assisted living you have private apartments, etc., you maybe had less sort of people meeting each other and ability to sort of contaminate each other. So I think globally the assisted living sector has been less affected than the nursing home one.
Okay, good. Yeah, I would just say on the current side, sorry I can confirm what Frédéric says. On our side, we observed a very high stability on the assisted living occupancies, which was not the case on the nursing home side, as you said, due to the COVID-19. People being afraid of bringing the elderly ones. So we had a dip a little bit, but high occupancy, very stable on the assisted living was a quite surprising outcome of this year crisis on my side. It's correct. Yeah.
Okay, good. There's another question here from Michael, which is, the market seems very diverse. Do customers have a clear understanding of the propositions out there, or is more consolidation or standardization necessary? I mean, are there blurrings, Alexander, between the different offerings? I mean, we saw Julia's sort of description of them, but is it as clear as, say, the US model, which has a very clear definition, for example?
No, it isn't clear, and that's one of the problems we have to deal with, because betreutes Wohnen, assisted living, right now covers all assisted living facilities, even if they're independent living or service living. And we're trying to sort of bring a little light into that by defining that market through, for example, GIF, Gesellschaft für Immobilienforschung. They are actually now defining assisted living in the sense of service living, less care, more service. And they also give it star ratings, just like in the hotel market, from 1 to 5, depending on the amount of services and the quality of the facilities. But that's still only transparency for the market. Now, do seniors know about these differences? No, we definitely have to let them know that there are these differences and what they should look for if they're looking for services or certain services.
Interesting questions here coming in as well. I'll coming in quicker than I can ask them, actually, but that's fine. Thank you, Evely, for this one. Do you see seniors starting to show interest in mid-level facilities in Germany's neighbourhood countries, i.e. Poland, instead of Germany? So facilities which are operated by German operators with mainly German-speaking personnel. Interesting one. Is anybody seeing that kind of thing beginning to appear in the market? Or is that sort of further off, really?
That could apply to the care market, but I don't see that happening in the serviced senior living market, because people typically want to stay in their environment, in their city or in their neighborhoods even. So we don't see that. But there may be one or the other person says, I can afford more services in Poland, but they may have to then learn another language for that as well.
Okay, good. One of the interesting things I think around this is location, because you've got that mixed decision about whether you're going to be in an urban location or a suburban location. And are there any particular preferences in terms of the German market?
As I just said, people generally would like to stay in their vicinity, in the city or in the environment and in the neighborhoods that they are living. If they can't find adequate facilities there, they may move to a different part of the city. But I don't see them. I don't see people that moving to the countryside that much, or from the countryside to the cities, because again, they want to stay in their social network and their social fabric.
But what it does mean, I suppose, then, Alexander, is that in terms of the opportunities for creating new product to meet that demand, we don't necessarily need to look at individual cities. It's really where these groups of seniors are living, essentially, at the moment.
Yes, we target cities 50,000 population and upward. We don't go into rural areas, but we go into smaller cities and we look at the market, the potential, and if there are enough senior citizens that can afford our product, then we'll build.
Yeah, it's quite an important point, Richard, this one. When looking at Germany, I mean, Germany has a very dense network of the cities that Alexander has talked about, which are, the 50 to 100,000 inhabitants. And for some investors, it may seem a bit confusing because maybe they come from environments where the cities are much more, represent a much larger share of the population, which is not the case in Germany. And so, as you just said, and Alexander just said, if you want to cater for the population, for the actual need, you have to stick to where they are currently and sort of develop there. So, and we've seen in the report, I mean, taking the top 20 cities, well, we actually have 20% of the where the development is happening. So, if you only look at the top 20 cities, well, you're missing out 80% of the market. So, so that's a key element, because sometimes, quite often, I can hear investors saying, yes, we want to go into that market, but they come at it with a sort of, office mentality. And so they say, yeah, we want to go into the senior living market, but we would like to focus only in the main cities. Well, yes, you can adopt that, but first, of course, your yield are going to be, even smaller. And again, you will be missing out on a large part of the market.
Okay, good. There's a question here from Philippe as well. Thank you, Philippe. The German healthcare tariff regulation being very different from one region to the other, what aspects can influence the integration of real estate cost, i.e. rent, into the residence tariffs? I suppose we can roll that into a more general point, I guess, around regulation and how that fits. And I guess, Benjamin, how do you see that in terms of, I guess, the regulatory side? Is that influencing the whole of the senior living healthcare side?
If you include nursing homes, I would say yes, because the regulatory bodies in Germany are quite complex. They are divided in as many federal states that there are in Germany, so 16 länder that can enact their own rules and laws on the senior living, which makes complicated for operators and investors to look clearly into this jungle. They even have different timing for those laws to come to force, starting with Bavaria, then NRW, Baden-Württemberg in the last 3 years. And what you see that it influenced the real estate very much, because it's defining also the maximum number of beds or units you might build or operate, the maximum number of residents per floor or per service units, which is around 15 usually. So it increases the staff requirements. It decreases the number of units you may build. So the economies of scale are reduced through those regulations. And in the end, everything must be larger, the room size, so the greater buildings must come with better quality of equipment. So yes, I would pretty say it helped push the cost of building new homes that are fitting to these regulations, and reducing the yields as a consequence for the investors. But that's only on the nursing home side. As said, on the assisted living side, you are still free to develop pretty much as you would like to, and that's why there is a clever combination of those two that is making sense, at least for us, in the future.
I'd like to stress that how important that is for the service living or assisted living, because that is not regulated, not subsidized, and also operating it is not regulated, and that's very important. We hope it stays that way.
Thank you.
Okay. And this question comes from Easter Saneki. In your opinion, what's the reason for the lag in the market? It cannot be for the lack of investors, as many investors are constantly seeking these particular assets. So I suppose that's partly a question picking up again that evolved, has the market evolved more recently? Where are we in that cycle? Is that to do with financing, opportunity? How do you see that, Alexander?
Well, we've seen that until 5-6 years ago, you were actually developing facilities for operators, because there were hardly any investors in the market that would pay the money, and the investment volume per facility was unattractive for them. The market was a niche market they hadn't discovered yet, as well as the banks financing, of course, these developments or purchases. And that's changed radically. I mean, we sold last year one facility for 90 million. That would have been unheard of, a couple of years before. or not possible. And so that market shift has led now to the development and the uptake in the market, and that's why it's lagging, or that was lagging in the past. That is, for me, the main reason.
Okay, good. We've got a series of questions here from Errol Reza. Thanks, Errol, for these. Really based around, I guess, the kind of services. What sort of services are required, I suppose? What technology did you find was useful in assisted living and independent senior living for health monitoring? Was wellness a key feature of independent living? And again, you know, what's offered in terms of the age group for 60 to 74 for mental and physical resilience, since living in small apartments can be quite depressing for this age group. So I suppose let's put all of those together into one bucket of I suppose what are the amenities that are being provided, what's being demanded at the moment. And interesting, actually, for this 60 to 74 group, it sounds as though that doesn't really fit into any of the senior living, given that the average age is 79 or above. So,
no, if I start, well, first of all, depends again on that rating. If you have a 1 or 2 star rating assistant living facility, you won't find any services at all. Perhaps 1 or 2 people on site, sometimes not even a person full time. The size of the flats. The higher you get into the premium segment, the bigger the flats get. So our average flat is 60, 65 square meters. And we do have about 1,000 square meters of communal area. I always say if you come into one of our facilities, it's like coming into a boutique hotel. Huge reception area, club facility, sort of conference facilities, club room facilities. We also always build a spa and a swimming pool. And fitness facilities, because those are the things that you also need if you're only 65 or 70 when you move into facilities. There are some people who move in there when they're already that age, but the majority is 79. And what are the basic services? Well, I'd say, you know, we have 6 people on average on a facility, and so we deliver all the services that are needed, from 24-hour reception services, emergency services. We organize, trips and community meetings, as well as do mail services, pharmacy services, and check on them if they've got a cold. But it is fully independent. They still say we want to be independent, and we value our privacy. We'd like to have a flat. We can cook in there. We can go shopping ourselves. We can live just like in a normal apartment, but we do have the possibility of using the services offered. And later on, if they need to, then they have the home care that can be offered in those flats.
Okay, good. Quick question from John Gladstone here is as well. Do the panelists think Europe will ever reach the stage in the US in terms of specialization in the sector, large retirement complexes able to cater for different needs and transition residents through independent living, assisted living, skilled nursing, as their needs increase? Do we see that heading, I suppose, a little more down a US route in Europe, or is Europe creating its own solutions? I mean, what's your sense of that, Benjamin? Is Europe doing something different?
I think Germany might also lead the way because they are quite innovating into regulating and creating those new services and new care forms, and with the ability to deliver with the financing. And so, but I could not generalize yet.
Okay, good. Frédéric.
I think what you have, I mean, you have always had 2 limiting factors to, you know, this Americanization of things. First one is availability of land. That's always been an issue to create this, you know, huge complexes. The other one, I think, is also that, you know, maybe European, if we want to generalize, are less used to those sort of very large, very big complexes. The third one is, of course, regulation. As I mentioned earlier, you know, in a country like France, you could not have this mixity of nursing home and sort of regulated and non-regulated in the same sort of area. It has been less the case in Germany. In the Netherlands, maybe on a smaller scale than you would see in the US, but you have a lot of sort of mixity of offerings. So I think it's still hard to generalize at the European level because again, as I said, it really depends on the market. I think you will have some experiments maybe of very large complexes mixing a lot of things, but I don't see that generalizing over time.
Okay, and a very quick one is from Barry. Does the availability of qualified staff and I suppose proximity to hospitals have an effect on the success and yield of locations? Is staffing an issue in terms of location?
I can confirm that for operators in Germany, the availability and density of qualified staff is the main issue that we are confronted with, and they are quite related to the location as well, indeed, because obviously employees would like to have a direct access to infrastructure, so to good transportation means, to good living areas and cheaper living areas. So that it makes a challenge for us also to go into the key and larger cities in Germany where the real estate price is very high, also for the employees. But on the other side, they have a nice transportation density. So there is always a trade-off at some point. But yes, staff is a key issue and a challenge.
Okay, good. Thank you, Benjamin.
I'd say that's probably also especially for the care and nursing homes.
Yes.
Assisted living, again, a different issue because you don't need trained personnel. You can even hire people that have been working in hotels before.
Yeah, but if you provide ambulatory care to those assisted living residents, obviously you're back to the search for qualified personnel. Yeah,
that's right.
Okay, that's great. I mean, we are literally about to run up against the 30 minutes at the end here. So I just want to ask one last question of everybody, which is, I suppose, how do you see the prospects for the market going forward, particularly looking at Germany? And does that tell you anything about the opportunities that there are? Maybe let's start with you, Alexander, just kind of, 30 seconds on, I guess, how you see the market and the opportunities.
I suppose this report shows very clearly where we're heading in this market. So the opportunities are there. I think we're restricted with land. I mean, we like to build facilities, of course, in central locations or in larger cities, and building up or finding 150 or a development where you can build 150 to 200 flats is not that easy. But we believe that we can put 3 to 4 properties or facilities per year on the market. We could probably double it. What you need is good operators, of course, that can actually manage those facilities. But I mean, I'm just going to be very exaggerate a little bit. The sky's the limit at the moment in this kind of market environment where we're going with demographics and all the other. Sorry, my phone is going bonkers here. Very much bullish about all of this.
Yeah, good. Okay, great. Benjamin, what's your kind of last thoughts?
We have, as you say in France, a boulevard, so it's very, very broad and open greenfield to further develop this sector in Germany. It's very interesting because you have very regularly new ideas and innovations on the care forms that we can implement, which all have different regulations and rules of the games. There are plenty of interest from investors internationally and nationally, and a lot of money willing to invest in this domain. So there is no lack of funding, also from the state, and the German state is very strong in his laws, legislations, and funding. And you have structured operators that are able to manage over 20 years 25, 30 years long, very good properties. They need to be built in an efficient way, not forgetting about energy savings measures that we are all confronted with. But if you bundle all those aspects and take care of the residents from the beginning onwards on the planning and designing of the building, I think you can become best in class and reaping the fruits of the growth, this demand.
Great. And last one from you, Frédéric.
Well, I think we have made the case for that investment class in Germany. I think I hope that it's clear to everybody that there is really a very good opportunity. I would say in all markets, even though it's a growing market, that it attracts a lot of people. It's going to attract many people, and as the panelists have said, you have to be careful and choose the right operators. You have still to choose the right location. Even though it's a growing market and there's a lot of demand, you can get it wrong. So of course you have to be careful and you have to find the right partners to evolve in that market.
Great. Thank you very much to everybody. Thank you speakers for a really interesting session, and really great to get that kind of depth of research and also discussion on these particular markets. For those who are in the joining us from RELEX, do visit the Senior Housing and Healthcare Association stand there. Thanks very much for all of your questions and all of your comments. Really interesting to get those. And just a reminder that you can download the Senior Living Report from Mosaic and BONARD on the link there, and it was already posted into the chat. Thanks very much for joining us, and look forward to seeing you at the next one. Thank you, everybody.